So what we will focus on now, we talked about this a little bit at our small meeting earlier, is, we live in a day and age, everybody has great social media present, glossy brochures, everything sounds great, right? On the surface level, everybody's got a great story. But being in private equity for now, this is my 25th year, started in 2000, working everything from small boutique firms to large broker dealers. There's really just a list of questions that it just makes it simple, but you would be shocked that just nobody asks direct questions to the sponsors. So just kind of put a due diligence slide together, some of the questions that people need to be asking, and I always start with the very first one, like I did at our table earlier, and nobody had asked this on their previous investments is, if this is such a great deal, how much money are you putting into it? And that's always my go-to. Does their financial goal align with yours? I see a ton of deals out there that, legally they're putting up 1% of the money, and then 99% of it is other people's money. So if things go south, if the deal don't work out, what did the actual sponsor or syndicator lose? Very little, if anything. So my number one lead in on any investment, it doesn't matter if it's oil and gas, multifamily, storage, any type of private syndication, is how much money are they actually putting into the deal. If they use terms like, well, we put in sweat equity to get it to this point, and or startup cash, that's always a red flag. Like, I want to know hard money, how much do you have at risk alongside me? And you can just go down the list. Next is the fees, transparency. Are they getting paid just to put it together? What is the ongoing management cost? Is it an annual deal? When you sell these properties, regardless of what kind of a project it is, are they getting paid on the back end also a disposition fee just to sell it at any price? Another one, how are the profits? Are you getting actual dividends? Or are you just accruing preferred returns that are building up over time that you may get paid later on if things actually come to fruition? So definitely want to check out what kind of dividends you're incurring along the way. Track record is the most important. Again, everybody's got a great present, but look into the details. How many years have they been doing it, and how many full cycle deals have they actually completed? And we're talking from inception of raising the capital all the way through disposition and actually net rate of return to the investor. Not just, blanket statements, but actually ask for full due diligence on everything that they've done. And we touched on this, just how long have they been doing this? Again, is it 8 to 10 years while the market's been great, or have they done this 20, 30 years and seen all different interest rate environments? And again, the last one, just management fee. How much is that impacting your rate of return along the way?